Hey everybody, thanks for joining me. It's Noe Fibonacci here. Today I want to go over what a bearish breakaway candlestick pattern is. Now, a bearish breakaway is a candlestick pattern that shows up when a reversal is imminent. Now, to go over this pattern, we actually had a very good example of it happen over the night into this morning. Now, here we are looking at EURGBP on the 4-hour chart. Now, the first thing to go ahead and point out is that we have this resistance area that price ended up, we created a high back in May 21st, I believe, and price came down from that zone and found some support, worked its way back up, and skimmed this resistance. Now, before price rose up to this level, we can first point out that we have a rising resistance and also a rising support that forms a rising wedge. Now, with a rising wedge, we should be looking typically for a bearish breakout. This is where a rising wedge is basically saying the bulls are losing steam and price is no longer going to go up any further, and we have this breakdown. Now, we can see that at midnight on the 4-hour candle here, we get a bearish breakout. And before that, if we take into account the previous candles, we actually do get a bearish breakaway candlestick pattern. Now, what a bearish breakaway candlestick pattern consists of is one large bullish candle followed by 3 smaller inner bars, okay, or inner candles. Now, the close and the open of these inner bars must be at or higher than the previous inner bar, okay? So then the 5th candle in this candlestick pattern tends to be the bearish one, where on the close of this bearish candle, price takes out all 3 inner bars, all 3 inner candles, okay? Here we have a textbook example of that bearish breakaway, and we get that bearish breakout. Now, following that pattern, we get some confirmation that yes, price is in fact going to push down further, and this comes to us in the form of a Marubozu candle. Now, a Marubozu candle is just meaning that in this case, the bears controlled the entire 4-hour time frame that makes this candle. This is strong confirmation that this breakaway is valid. Now, to go ahead and throw some confluence or some extra pizzazz to what we're looking for, some confirmation, is let me go ahead and bring up the indicators here. First, let's go ahead and point out the 200 EMA comes in right at the highs of this pattern, okay, and price trade or breaks down below and starts to trade below. So we are, in that case, we are looking with a bearish bias, okay? Now, in the formation of the rising wedge, if we look at volume, we can see that volume started to decrease, okay, as we got higher and higher to this resistance. Once we skim the resistance, we get that reaction. So that's all I got for you guys today. A very simple bearish breakaway candlestick pattern can be very effective if it's traded right, if it's confirmed with the right indicators and following price action. Thanks guys for joining me. For all things currency, keep it current with Noe Fibonacci.